Hi, welcome to VolQuant, the volatility quant engine. This is your ultimate toolkit for mastering market regimes. Now, whether you are scalping or day trading or swing trading, understanding volatility structure is key to executing trades with confidence. VolQuant gives you a real-time quant grade edge by simplifying complex volatility signals into actionable intelligence. Now let's see what VolQuant is all about. One thing, there are different parameters. The first parameter is called score. It is one of the core regime signals of this system. This is your smooth volatility regime signal that aggregates multiple metrics into one clean indicator. It filters out short-term noise while retaining the macro structure of the market. What does this mean for your trading? Now you can detect expansion and compression cycles of volatility, allowing you to transition strategies before the crowd reacts. Now this volatility shifting is shown through a color visualization on your charts. We'll get to charts in some time. Now if the visuals are clear, your decisions also will be clear. Now VolQuant uses plot lines and color shading to mark expansion and compression zones. You get instant feedback on whether you are in a trending market or a congesting one, which is very critical for intraday action. Next comes a probability of expansion or compression. That is, whether volatility from here will expand or compress, whether the market will become more volatile or from here market will get into a congestion. Now, once we see this probability, it is actually a black and white reading, whether we will expand or we will congest. So it adds a probability layer. Now this also shows how likely we are to enter or exit a volatility regime, be it expansion or compression. So now no more reactive trading. Use this forecast to smooth strategy transitions and avoid chop. The next factor or matrix which we see is called persistence, which is also regime strength or regime durability. Persistence tells you how sticky a regime is. Regime means whether our expanding volatility regime or a compressing volatility regime. Now a high persistence, this shows how persistence means regime durability. So it tells you how sticky a regime is. Now a high persistence score indicates a durable trend. So you can size up, that is increase size, hold longer or let profits run. A low score warns of whipsaw risk, that is now be conservative, reduce size or do scalps. This simple metric can supercharge your risk management. Next, there's something called a trend bias, which gives you directional clarity. Now we just don't stop at volatility, we also show you the direction. So trend bias converts regime data into human readable action. That is, whether it is bullish, the market is bullish, bearish or neutral. So you can align your trades according to the market context instead of fighting it or trading on hope. Another metric which we use is something called gradient, which is volatility momentum. Now this is the momentum engine of volatility. A positive gradient tells you that volatility is rising. So it's time to widen your stop losses or prepare for breakouts if you are within a congestion and if you see the gradient is rising. A negative gradient, expect tightening ranges, perfect for pullback entries or scalping. In short, this is your signal to time your entries and exits with precision. Lastly, there's something called a note engine. It's an AI style commentary which takes into account all the factors which we spoke till now and gives you a dynamic feedback. It shows you something like high confidence expansion or whipsaw risk, now reduce size. So in simple English, when one line is there, this helps you to act decisively without overthinking. Lastly, everything which you see, the points which you have studied till now, comes together in a real-time dashboard. It shows you the regime, trend, persistence, notes. It's kind of having a quant assistant on your screen. Use this to stay structured, especially when emotions run high. So now you see on the right hand side, the regime it's showing as neutral. Last flip means when has the regime changed at the time. What is the current regime? This kind of scale means actually neutral. P expand compression is what is the probability of expanding probability or compressing probability. Persistence, as we spoke earlier. Bias, that is which direction the market is going. Gradient, as we said, volatility gradient. Score, on which this whole thing is based. And notes, that is after looking at all the above points, what is the crux, how you should interpret the market, that comes as weak trend. Actually your notes, we have totally another PPT. Okay, so you have an overall trading use case. So according to this, you should be doing a different option strategy. That is, if it shows something, you will do a spread. If it shows something, you will sell options. We'll come to that when we'll get to notes. So, and lastly, you need to avoid trading when regime is in compression, bias is neutral. Then simply do not day trade. So VolQuant is not just a tool, it's a trading framework. It takes the guesswork out of market structure and puts you in control. So master volatility, master your trades. Welcome to VolQuant. Now what we will do is, we will study the notes engine in a bit bigger detail. Now the notes engine which you see is basically built to give you contextual interpretation of what's happening in the markets. It gives you critical questions and its answers. Is volatility expanding or compressing? Is the market trending strongly? Is the trend stable or is it likely to reverse? Are we in a breakout or a mean reverting zone? These insights are displayed in the notes row of your VolQuant dashboard, giving you instant feedback without having to overanalyze. So how does it work? Each line of the notes engine checks for specific market states using a structured logic system. It analyzes variables like regime, whether we are in an expansion, compression or neutral volatility. It analyzes persistence, how stable is the current regime. It analyzes volatility gradient, is volatility gaining or losing momentum. Then it sees the trend bias, what's the directional tilt, bullish, bearish or neutral. By combining all these factors, a simple readable message is sent to the trader, is shown to the trader. For example, it might show you something like this: strong expansion regime with high momentum and persistence. This tells you that the market is in a powerful trending phase, a great time to scale up or follow trend based setups, or for option traders, buy naked ATM options. If you see this chart in front of you, regime is equal to 1, that is you're in expansion, persistence is greater than 0.85, vol gradient, volatility gradient is rising. Interpretation is strong expansion regime with high momentum and persistence. Message will be strong expansion regime, high momentum and persistence. Okay. Or you might see something like a compression zone with breakdown, high confidence, which means a potential volatility breakdown is imminent, probably a good time to short straddles or do something else. Now, if none of these signals are found, these are some sample signals which I have given. If none of these are found, then it will show you mixed or weak signals, stay cautious. This means the software codes or algo is also sometimes confused like traders and is finding no good clear opportunity. So then the advice is to stay out. Now the notes engine, basically what it does is, it's like having an AI analyst working along with you, providing clarity, reducing hesitation and supporting smart structured execution. So trade with insight, trade with structure, trade with VolQuant. So we have now learned the theory. Let me just show you in a very fast manner how this whole thing works. Now on this chart, we have the VolQuant system at the bottom and we have the AVWAP navigator attached on the upside. We don't have the option chain analyzer attached to this yet. So what I will do this, in fact I have got two perfect days out here. On 15th expiry we had a massively trending day, and on 16th Friday we had a totally congestion day. Let's see how AVWAP and VolQuant would have handled these 2 days. Okay, I will go to bar replay and just go to just before 15th. That is, I have gone to the place on Wednesday evening and I will just start this at 0.5x. Let us see. Remember, if this is red, it means volatility will expand. If this is yellow, that means it will compress. So we will kind of try to avoid trading if there's a compression, try to trade if there's a expansion. So Thursday morning 9:15, volatility is expanding, market is going down, so this is a short. This is also bearish out here. and you will see this continuously. I will just increase this. You can keep on watching the notes also. Now here you have mixed signals. Watch for reversal. Watch for reversal. Here it is telling you to watch for reversal. Right? Here comes the reversal and bullish. Good confidence. Good confidence. Still good confidence. It will jump once again. Good confidence. Jump. Watch the notes. Watch for reversal. Now it will reverse. Reversed. These are pretty big moves. Now it is again telling you watch for reversal, means this particular fall it will reverse again on the upside. Just keep on watching this. If it has to reverse on upside, this will become bullish first. Congestion, expansion, yes, bullish. Normal volatility, it starts to jump up. This signal comes, which means there is a very big move in the offing. Very big move is coming. It is monitor closely. Bullish, small bullish. Let it just start to expand. I need an expansion signal out here. Bullish, expansion signal, and it starts running up. So this red actually tells you volatility is going to expand. Then it comes to normal volatility and it continues to go up. 2 o'clock. Now just watch for, these are congestion signals coming. This is telling you mixed signal. So basically this is where I will not expect further expansion in volatility or a large move. There will probably be congestion from around here. Let's see what happens. And see, the bias has also become neutral, neither bullish nor bearish, a bit of bullish, bit of bearish, but not very strong signals, and continuous congestion signals are coming. So from motamoti 2 o'clock you can decide, boss, yeah, expiry move is not going to come, it is probably going to congest at that particular place. If you are an option seller, you can sell a straddle out there and sit tight. This buy will not. Okay, now we come to 16th, that is on Friday. We have started trading on Friday, and see, Friday from the morning it is showing you there will be a congestion market. Then it tells you there will be a bit of expansion. I get ready for a trade. A bit of bearish bias, a bit comes down. Point is, when there a congestion is coming, then stop trading. Start trading only when you get an expansion signal. It is continuously showing you that there is a volatility congestion going on. Do not trade. Just see the difference between the previous day and today. This sell signal will not work because we are in a congestion zone, or even if work, it will be maybe a 20-point scalp, 15-point scalp, not more than that. You are not going to get 100 points today simply because this is continuously in a congestion zone. Congestion going on. If it's a congestion zone, your bias, bullish, bearish will not work. Regime is compression. So nothing will work. Don't trade. In fact, the only trade which you can do here is if you are an option seller, sell a straddle or a strangle and sit tight. If you are following the AVWAP navigator, you see it is within the two AVWAPs. That is also telling you there is a congestion, and this is giving you a kind of volatility confirmation that you are in a compression regime. So here you do not spend energy looking for a trade. You save emotional capital because you are continuously in a compression. You understand the difference between 15th and 16th, right? 16th compression came after around 3 from here. This was your signal. So you started reducing positions. But here this compression is going on like hell. It's going on and on. So there are no trades. So for a day trader, it is important your trades are good. But it's also important to understand when to stay out of markets. So this VolQuant compression zone tells you, boss, stay out of market here. Don't bang your heads on the market and this time and look for trades, because nothing is going to happen. We are going to stay in the same range. And this is dynamic. So if this goes into red, I will get prepared for a trade. That's it. I showed you 2 days. I can show you some more examples, including all the things which I have seen. Okay, this is 8th May. Now I have 2 indicators attached out here. One is the VolQuant, the first panel. This panel is the option chain analyzer, which analyzes the option chain and gives you bullish, bearish. And this one is your AVWAP. Now 8th, if you see, you are continuously in a congestion. Here is your yellow congestion zone. From here, this red actually where an expansion regime starts. If you remember, 8th was a nifty expiry. So this bar tells you now volatility is going to expand. It is going to be a volatility burst. This one tells you bearish. Option chain analyzer is already bearish. So if you short out here, this is somewhere around 24,440. It falls to 24,200. This on an expiry day from 145 is a massive move. This sell signal can always be taken because option chain analyzer is red. This is telling you expanding probability, and this is telling you market is going to fall. So on 8th May from 10 o'clock till around 1:15:20, you do not have any major trade. You can just sit, waste your time, or buy, sell straddles. Then get into a directional mode, buy put, sell futures, whatever, and see the move up. The next day is 9th May. I have taken one day after the other. This day, if you see, morning there is some volatility suggested. Probability of expansion is there. It is bearish. Market kind of falls. Then from here it tells you that market will be in a congestion zone, this point, and see market is continuously in a congestion zone. If you see the volatility indicator, it never goes into expansion. So after this point from 10:30 to 3:30 there is actually no trade. If you traded on 9th on a buying option perspective, you would have lost money. Let's come to 13th May. Interesting day. Early morning there's a volatility expansion, so obviously this signal can be taken. This is bearish, option chain analyzer bearish. You short out here somewhere around 24,900, market gets down to 24,700. This is a 200-point move. Then it tells you volatility is normal. In normal volatility you can trade. It is not a congestion. Sell signals can be taken and you are getting trades. Sell signal can be taken, getting trades. Here you enter a congestion. I have marked this in a red box. So this is the place you do not trade. And if you can see, if you try to buy, sell, whatever you do, you are going to lose money here. You are not going to make money, right? Let's come to 15th May. This is the day which I was telling you, showing you last Thursday when there was a massive move. So this is where it is bullish, it goes up. This is where bearish, trade doesn't work, congestion. Here it tells you expanding probability, big move alert. Option chain analyzer strongly bullish on an expiry day, and this is the move you got. Here it tells you compression regime, and compression regime starts. 16th May I have multiple screenshots. This is 16th May Friday morning. This is like 10:30. If you see, early morning suggested some volatility, started with congestion, suggested some volatility, then got into normal mode. Within AVWAPs, no buy sell signals, no trade. This one is also not solidly red, so you don't have any chance. It is telling you mixed signal, it is telling you regime is neutral. Then I have a screenshot at 11:40. Same thing is going on, but biggest point, it has entered into congestion, yellow, VolQuant. So no trade once again. Now you come at say 12:45. Okay, this is interesting. What happened out here were, you are in a congestion zone, market rose up and went here. Option chain analyzer for that moment turned to bullish. But this is telling you compression, the notes is telling you compression with rising momentum. You are in a compressive zone, but momentum is up. So it could possibly mean a mean revert. Mean revert means if it goes up, it reverts. So this is 12:45. At 1 o'clock, see, this is where I marked, and this is your mean revert. This is actually 30-35 points. Okay. So rather than buying out here, and this option chain, if you see, turned to light blue after the bar was closed. I took it in the middle of a bar. So this actually, this also is again telling you mean revert. So from here it will again go up a bit. So it is going like this. Now 1 p.m. Yeah. So if you just go to 16th and see the whole chart once again, this is your 16th, and this is what happened throughout the day. Actually nothing happened. And this from 11:10 it told you was no trade, get out. So this kind of covers this particular class. I am not going to cover AVWAP Navigator, option chain analyzer in detail because you guys already know how to use that. Along with this, use the VolQuant the way I have shown, and your trades will become much better, because as of now, along with AVWAPs, you are using price and volume. For the option chain analyzer, we are using the option chain. VolQuant is a volatility regime study. It is totally outside the two indicators which you have already seen. Now this particular notes which you have video which you have seen, the PPT, the PDF is attached below. You can see the same material on PDF, read it, practice it and stuff. And if you have any questions, obviously you can use the chat box to ask me the questions. So best of luck. I hope everybody's questions regarding when to stay off the markets becomes clear, and all of us get good in day trading in the markets. Thank you.